Hello, everyone. Thank you so much for joining us for another weekly wrap-up. My name is Jeremy Kronemeyer, Operations Manager for Wickham Financial Group. I have Graham Wickham here, President and CEO of Wickham Financial and Insurance Services. Graham, what happened in the markets last week?
Yeah, thank you, Jeremy. And again, thanks for all of our listeners jumping on the call. We've got a short week this week as we're coming into Independence Day. So keep in mind, the markets are going to be closed half day on Thursday and all day on Friday. So we hope everyone has a safe 4th of July holiday. But let's talk about the market. So we had the S&P 500 rise about 3.4%, and this is last week, and the Nasdaq closed up about 4.3, hitting some new all-time weekly closing highs. Now, the Russell 2000 and the international stocks, they weren't left out. They were up about 3% as well. We look at 8 of the 11 S&P sectors were higher, and that was led by technology and communications. We also saw a pretty good jump in financials, up about 3% after the Fed moved to ease some bank leverage rules. Now, with commodities, we saw crude oil drop about 12% to $65 per barrel, easing because of some geopolitical tensions over Israel, Iran. And then we saw gold fall despite some weakening U.S. dollar, which hit a 3-year low. Now, if we look at interest rates and some Fed policy, we saw the U.S. Treasury yields fall. So the 10-year note was down about 10 basis points to 4.28%. And the Fed Chairman Powell signaled no July rate cut, but they're waiting to see what the June and July inflation data looks like. Rate cut expectations and concerns over Fed independence, generally just pressured the dollar. If we look at some economic data, we saw core PCE price index rise slightly to 2.7% year over year in May. Consumer spending fell 0.1% in May. And Q1 GDP, now that was revised down 0.5% from 0.2, mainly due to some weaker consumer spending. If we look at the S&P Global Flash PMI, the composite index, it dipped to about 52.8, and that was from 53. Some price pressures persisting here. If we look at consumer confidence, they declined unexpectedly. And if we go over to the housing market, it remained pretty tight. We saw the median existing home price still at about $422,800, and new home sales fell for the most in 3 years. Globally, we saw NATO summit ended with some positive. We had all of our allies basically pledge more funding for defense. We saw Germany business activity rebound, and their manufacturing orders did surge. Over in Australia, inflation cooled. We did see some rising chance of some rate cuts. Now, over in Japan, we saw the core CPI in Tokyo slowed, but food prices may keep rates unexpectedly alive, or rate expectations still high. So if we look at this week, we'll look at U.S. markets, some economic calendar. We'll see as I mentioned, the market's closing half day on Thursday, all day on Friday for Independence Day. But we'll keep a pretty close focus on monthly U.S. job reports. Expecting about 120,000 jobs added, with the unemployment rate rising to about 4.3%, so still well in check. Some greater significance probably coming out with the Fed policy uncertainty and the White House putting some pressure in that area. If we look at some other labor data, we'll be looking at the ADP private payrolls, JOLTS job openings, Challenger job cuts. And then Atlanta Fed, their GDP now estimates for Q2 growth, that's now 2.9%. But some analysts were still warning that we could still see some soft patches coming through in the housing market, labor, just generally with the consumer maybe lightening up on their spending a bit. The Federal Reserve and the central bank, Fed Powell, and other central bankers will be speaking Tuesday at the ECB forum in Portugal. And the market will be watching some clues. Are they going to give us any clues on any timing of some rate cuts? Some other U.S. data releases, we'll be looking at the ISM manufacturing and the services PMI and some factory orders. And then we'll kind of wrap some things up this week with some international highlights over in the Eurozone. We'll look at some preliminary June CPI expected, and I think that's expected to be near 2%. And then in China, we'll look at manufacturing and their services PMI when that comes out. Jeremy?
Gotcha, Graham. I had a question for you. So the markets have really since April really gone straight up here. What do you see that for our consumers and our customers here?
Yeah. Well, I think you got to expect volatility. And the best thing I say is, I hope you participated. I hope you're enjoying it. I mean, what volatility did we see? What volatility did we expect with the events going on with Israel, Iran, all that? Expect some volatility here. The markets don't go up forever without a pause. Would not be surprised that we get one that maybe just refreshes. Maybe we get a rotation. Maybe the stuff that is outperformed, maybe rotating into the areas that have underperformed. Would not be surprised to see that. So sometimes it's not a broad-based market correction. Sometimes it's internal. So I think an internal rotation, maybe some softness here and overall performance. But if you've been in it, congratulations. It's been a great ride so far for the first 6 months.
Gotcha. Well, Graham, we always appreciate the information and expertise. And thank you to our listeners checking in with us every single week. And like Graham said, we hope you have a nice 4th of July holiday, and we look forward to seeing you next week.
Take care.